Hello and welcome to Weekend Investing Daily Bytes. We're shooting episode 280 on 12th of September 2022. And we are going to argue today momentum investing is the best. It may sound a bit pompous because we are biased, but I'll give you enough reasons to maybe start believing in what I believe in. Nevertheless, let's go to the market first. So, real estate running very hard today, plus 2.2%. Nifty also remaining in the green for the entire day after opening somewhat on a gap up basis. There has been no further bad news on the weekend. We've crossed that major trend line that we had took few days back, and we are still consolidating little above it. So a major move upwards is still yet to come. And I think once you cross 18,000, that may start. IT stocks also made a comeback at plus 1.4%. Commodity stocks also up. PSU banks up. Infra, metals, energy stocks all up. There was no sector in the green that we track. So all good on that. Nifty itself closed at 0.6% higher. In terms of broader indices, 1.19% up on Nifty Next 50. So that's a pretty good gain on the Nifty Junior Index. 0.95% on small cap index, 0.85% on mid and small cap index, and other larger indices also up 0.7%. Nifty closed, as I said, 0.58%. What happened in weekend investing small cases? MIATH up 2.2%. MI25, the small cap small case, up 2.08%. Fantastic gains here. NNF10, which tracks Nifty Next 50, up 1.61%. MIATH2 plus 1.35%, MI20 1.1%, MI all cap 0.95%, all good. I think except MI50, which did not do much today, but other than that, I think most strategies either beat their respective benchmark or were very near them. So a reasonably good day for all our strategies as well. Heatmap for the day, reasonably green all through. Some mild losses here in Coal India, in Shree Cement, in HDFC, but other than that, IT up, consumption up, autos are up, FMCG is kind of flat, Reliance was up, State Bank, Bajaj Finance, ICICI Bank also up, Adani Ports was running hard, Divi's Lab was running hard, Eicher Motors did well, and steel and cement stocks also did well. So reasonably, all in all, a good day. In terms of the internals on the top 500, what stocks did well? KEC Fine Organics up almost 9%, Welspun India up 7.5%, Hindustan Aeronautics and Tata Investment Corp up 7% each. So pretty large gains. Asahi India losing 6%, Dhani and Grindwell Norton losing 5%, India Bulls Housing and Krishna losing about 3.2 to 3.4%. So coming back to momentum, you very well know that we promote momentum investing in a big way. Weekend investing is all about momentum investing. A lot of other managers use mixture of a lot of strategies, but we are very confident that momentum investing can give us the exceptional gains that we're looking for, and there is really no other strategy that comes close to beating momentum investing. And this is not my bias saying. I mean, there are tons of academic papers who have done research on hundreds of years of data, especially on the American data, and they've all concluded that momentum is such a anomaly. Even the father of finance, Eugene Fama, has said that momentum is the biggest anomaly, and it kind of hurts him when he thinks about the efficient market hypothesis versus what is happening in momentum. So nobody is able to explain it, yet it exists. So while there are efforts to explain that it could be herd behavior, it may be because that new information takes time for it to percolate into prices, but nobody can really pinpoint why momentum exists, why gains based on momentum investment exist and why momentum investment or momentum investing remains the premier and the best investing factor amongst all other factors, whether it is growth, value, size, whatever. So the sense is that there is some unknown, and there is some unknown in everything. So science and data have not been able to prove or exactly calculate what is that unknown, and that unknown is somewhat related to human behavior. So our behavior itself is not changing. First of all, how humans behaved in financial markets 100 years back or 50 years back is the same how they behave today. Greed and fear is not going away anywhere. These are basic human emotions, and as long as humans are trading the markets, this is not going to change. If someday some only bots or machines may trade the market, it may change. But again, humans are designing those bots, so that emotion is getting passed on in even our algorithms as we design them. So human nature never changes, and hence over data over hundreds of years proves that momentum is the best factor for investing in the markets. And as I said, the people have been trying to explain it, but it doesn't work like that. How is momentum very different? Is that it's a rule-based strategy. It is very, very unambiguous. It is crystal clear how we are executing our strategy. You can design your own momentum strategy. There are 50,000 ways of doing momentum investing. There is no one particular way, but all the styles within momentum investing also are extremely clear, extremely robust, extremely non-ambiguous. So typically what happens is that investors buy stocks, and they buy it because they forecast or they predict that this company will do well because of XYZ reasons. There are 50,000 other reasons why it may not do so, but of course, as per our human limitation, we cannot calculate each variable in that complex machine, and hence we choose to go with the few variables that feel very naturally attractive to us, and we buy based on that. Sometimes it works, sometimes it doesn't work. And most of the time, because it's a discretionary decision, a very well-researched decision, and a decision to which we attach our emotions and behavior with, we don't have an exit plan, because an exit plan requires a clear-cut methodology, and conventional investing, because it is culmination of 50,000 variables about management, about growth, about vendors, about sector, about macro, about whatever, there cannot be one answer to it. It will only be that once the situation changes, the entire environment changes, maybe the price drops also, then the person will have to again consider all these factors and come out with a result whether he should buy or whether he should sell or hold. So again, very, very difficult for most people to do, especially non-professionals, and hence the requirement for conventional investors is to buy as low as possible, so that there is not much room to lose there. And as stock drops, people keep buying because they feel that this is the low now. Momentum investing, however, can enter anywhere. Even after stock has run up 100%, they can still enter without much of fear, because they know that rule will take them out of the stock even if it starts to fall from that point onwards, and they'll maybe take a small hit but get out. So having an exit plan is like knowing sure shot that you will be able to get out with a small hit. Like if you buy a car and the dealer tells you that if you like within 6 months you'll be able to sell it off at 15%, 20% discount back to me. So that's like a, an insurance. It's like a exit plan already in place, that if you wanted to, you can always sell it back 20% lower. So that's somewhat analogous to what the mental framework of a momentum investor is, that they are not afraid when they're buying, because they know there is a sort of a floor to this. So having a plan is the key to success here. Another sort of analogy is that, like, if there's a car, then the body is the sort of value and the wheels are the momentum. So, if you have a very nice, beautiful body, of a Porsche or whatever car you may like, BMW, it's not going anywhere without the wheels, right? I mean, you can sit and enjoy inside it, but it is not going anywhere without the wheels, because the wheels and the movement will come only when momentum comes and, attaches itself to that car. So momentum is very integral. Without it, nothing moves. So even if you identified the best car or best stock, it is not moving until momentum starts to catch it. So this is sort of the basics of price action in the market. A lot of people don't want to either believe it or, accept it. But even when you are not doing the conventional way of momentum investing, you are still doing momentum investing. You are looking for momentum in earnings, you are looking for momentum in margins, you are looking for momentum in market share, you are looking for momentum in net profit. You are a momentum investor, please believe me. The only thing is that the formats may be a bit different how you are doing momentum investing. So without momentum investing, nothing exists, but the best way to play it is to have the conventional rule-based momentum investing. So the last point here is that please be very, very clear. However much anybody tells you on Twitter, on TV, in reports, the Gyanis of the market, nobody knows what happens tomorrow, 5 years later, 10 years later. Nobody knows it. Nobody knew what kind of inflation was coming. Nobody knew what kind of recession is coming. Nobody knows what kind of war is going to happen. Nobody knows what kind of currency mayhem that may happen. Everybody is just making guesstimates, intelligent guesstimates, but still guesstimates, based on their experience, based on projecting the current trajectory. For instance, past 3 months or past 12-month result is of the past. I mean, when we get the results of a company today, we get very excited and we go and buy the stock, because we are projecting that the company may continue to perform in the same trajectory, same margins, the environment may remain the same, the consumption of that product or service may remain the same. Those are huge projections, whereas the result that has come is of the past. So the past is not predicting the future in any way, except that we want to project it as as a linear projection of, or linear trajectory of that result. So again, go with a strategy that has a potential of self-correcting. So index is a good strategy. Index is a momentum strategy. The only thing is that index is a momentum strategy with a delayed rebalance. If the rebalance is happening in 6 months in Nifty, by that time, Yes Bank and India Bull Real Estate and all those kind of companies which are there in the Nifty sometimes, drop 90%. So index is a momentum investing strategy. Please use it. It will have some delay in rebalances of weak stocks. Use strategies which can better these indices. So use MI India Top 10, use NNF 10. These kind of strategies can improve on the index returns in a very efficient manner. Also, this very nice chat I had with Mr. Neeraj Arora. He's a fantastic interviewer, as well as he takes CA classes, and I learnt about him very recently, and he's a great guy, and he made me so comfortable in this chat. It's about 50 minutes of chat, but very clear, crystal clear, conversation about momentum investing. He asked the very pertinent questions, and I request that if you are a bit not so confident about momentum investing, please go through this chat. This will clear most of your doubts, and the link for this is below in the description, so please go through that. And this is all I have for today's daily bite. Thank you so much for watching, and please do share it with your friends and let me know what your friends think about this. Thanks. Bye.